Is a recession for the USA overdue? Well, it's kind of like a tug of war sometimes. Some days it's flashing all these warning signals. The Great Depression's here. It's all going to go to zero. Other days it's holding steady. Things are actually looking pretty damn good. Bulls say we're still rolling. There's plenty of fuel left in the tank, baby. Bears are screaming short the market at the top of their lungs. It's all going to go down. And there's enough conflicting data. Flip a coin, man. See what happens. But let's cut through the noise with facts and see what's what, because whatever happens, our crypto portfolio is going to come along for the ride. Guaranteed, either to Valhalla or to Hades. Let's look at some history here from the National Bureau of Economic Research. NBER. They're the ones who officially declare recessions from 1945. After the Second World War all the way up to the last one, April 2022, NBER was there. You know, the Corona beer pandemic mess. We've had 13 full growth stretches between those recessions. Those are the gaps between one downturn wrapping up and the next one kicking off. Add up all those months, it's about 770. Divide that by 13, you're at roughly 64 months or 5.3 years. Some folks round it up to 5 to 6 years just to keep it simple. It's a range, not a hard rule, obviously. Now it's March 2025, 59 months since April 2022, so 4.9 years on that 5 to 6 year average. So I'd say we still got some fuel left in the tank, but there's a little problem here. You see, because in 2022, we had a recession. Q1, Q2, both had negative GDP growth. The problem is that NBER decided, you know what, we're not going to calculate it like that anymore. This one doesn't count. Now, whether that was playing politics because of the current administration, they didn't want to give Biden a recession, or they really just decided, you know, we just can't count it like that anymore, guys. Fact of the matter is, for all intents and purposes, 2022 was a recession. In a lot of ways, that recession kept getting kicked down the road. And even what we're feeling nowadays is sort of the hangover from that recession. Interesting, right? And if that's the case, it means we have lots of fuel left in the tank before our next recession is due.
But Lark, does that mean we have to wait a month or a year or 2 years?
Oh, crazy, man. What's going to happen? Well, I don't have a crystal ball, okay? But we do have numbers. Unlike pessimistic or optimistic words, numbers are relatively neutral. It's neither bull nor bear. It just is what it is. We look at macro numbers, we look at charts to try to figure out where we are now and how long we might have. A great place to start is the housing market. Why? Well, think about it. People buy homes when they're feeling good about the economy or confident they can swing the payments. For the most part, it's the biggest purchase of the vast majority of people's lives. If they can't afford a house, chances are they are strapped for cash elsewhere too. They're certainly not going to be buying a lot of dog coins. The Federal Reserve Bank of St. Louis says that existing home sales are around 4.08 million a year in January 2025, which dropped 4.9% from December 2024. The steepest slide in 7 months, basically at the same kind of lows that we saw in the great financial crisis of 2008-2009. Now, this 4.9% decline from the previous month is the sharpest drop in 7 months, and the decline is attributed to persistently high mortgage rates and elevated home prices, although we are starting to see home prices coming down as the market's just flooded and people are getting more desperate to sell. Consumer housing sentiment is down year over year, too, for the first time since 2023, so maybe we're closer to a bottom on the housing market versus we're on the verge of a mega collapse of the housing market. The housing market's been bad for a while now, so maybe if Trump really does start cooling down the long-term interest rates, we have seen, of course, that mortgage applications have been going up over the past 6 weeks. Home loan interest rates have been falling the last 6 weeks. Maybe there's a thawing coming, and that'll actually start re-kicking things in the economy. Hey, real quick before you into the next numbers, I want to take a moment to let you know how you can get $50 for free with Femex. One of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs. And currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Now, let's talk jobs, man. The unemployment numbers, man, we hear a lot about this. And a little bit of a head scratch to this one. The unemployment rate for February 2025 is at 4.1%, up from 4% in January. That's a 0.1% bump, and it's not exactly sky is falling kind of territory. Worth keeping an eye on. The fear is that we're going to go from 4.1% to 10% in like a couple months. This is historically low unemployment, by the way, just so you understand. Here's the twist, though. The household survey shows 588,000 fewer people employed from last month. Still a big worrisome number. Now for some good news. Businesses added 151,000 jobs to their payrolls. Most of the new jobs went to American citizens, not to immigrants, which is, in theory, good for the U.S. economy. Does this all sound confusing, though? Well, jobs are up. Unemployment ticked up a little bit, too. But here's why. The U.S. Bureau of Labor Statistics, or the BLS, best buddies with the NBER, BLS, faces that 4.1% rate on the household survey, counting people. So the 151,000 jobs, that's from payrolls, counting jobs at businesses, okay? So are the numbers good or bad or what? Well, they're still good, but the fuel gauge is, low enough to make us say, maybe we should pull over and get some gas for that employment data there real quick, okay? The 151,000, by the way, is below the 160,000 estimate and way lower than 2024's average 186,000. For comparison, December 2024 added 256,000 new jobs. Way hotter. So jobs are growing, but at a slower rate. Next up, let's discuss something you've probably heard a bit about. That's the inverse yield curve, the signal of signals. It's the Fed's favorite recession indicator, and it's a doozy. Man, we made whole videos on this topic. It's a fascinating thing. So this happens when the short-term treasury yields, like the 3-month, beat the longer ones, like the 10-year. Here's the bad news. That flip happened at the end of February 2025, with the 3 months surpassing the 10-year. Now, here's the good news, sort of. If a recession does hit, it usually takes around 6 months from the time that this happens, if we're on the short end, and up to 24 months if we're lucky, and the long end. So there's a good chance it could land by the end of this year, Q4 2025, but here's the catch. Like any indicator, it's not foolproof. Take the last inversion in 2022, more than 2.5 years later, still no recession. Again, I would argue that early 2022 was a recession, but the NBER doesn't agree with me. Reality does, though, okay? Screw you, NBER. The verdict here, still fuel left in the tank, but we probably can't travel another 1,000 miles on it, let's say. Another way to check the economy's pulse is by consumer spending. It's more than 2/3 of U.S. activity, so it's a pretty big deal. The bad news is it dropped 0.2% in January 2025 per the Bureau of Economic Analysis, the BAA something. Anyway, that's the first decline since March 2023, the biggest in nearly 4 years, which is a bit of a yikes, to be honest. Plus, the University of Michigan's February 2025 index shows that consumer sentiment actually tanked, down 10% from January and 16% from last year. Now, it's not exactly screaming mega panic yet, but it's going in the wrong direction. Something to keep an eye on. The joyride might not last forever. The next indicator, probably something you don't hear that much about, but maybe you should hear a little more about it. The American Association of Individual Investors Sentiment Survey. It's a mouthful. It's a weekly check with a pretty simple question. What direction do the American Association Individual Investors members think the stock market's headed for in the next 6 months? Just 3 choices: bullish, neutral, or bearish. Here's the buzz. Participants are getting more bearish. On February 19th, 2025, bearish sentiment hit 40.5%. But by the latest survey on March 12th, 2025, it had jumped to 59.2%. Meanwhile, bullish sentiment tanked to 19.1%, way below the historical average of 37.5%. Now, look, short's just a survey, and it doesn't cover everyone, obviously, in the economy, but these are still retail investors, just individual, regular folks. What is interesting, though, is that that level of bearishness has usually come at the absolute peak bottom of market corrections. So take that for what you will. Now, the World Economic Forum says they account for 52% of global investments. If they throttle back, it could actually hit the market hard. We're talking about retail investors. So what do the whales, moneymakers, and powers that be say about what's going on right now and the chance of an economic Armageddon? Well, JP Morgan those guys say the chances are 40% by the end of the year for U.S. recession, up from a previous 30% forecast. But they've also been wrong for years straight running. They were calling for recession in 2022 and 2023 and 2024 with much higher percentage chances. Never came. Well, Fidelity says the U.S. is at the late expansion phase in its business cycle, which means we're probably heading into a recession in the near future. But that's a bit conflicting because a lot of data shows we're actually more at the start of the business cycle. Again, a lot of conflicting data here. Other economies like Japan, the UK, the Eurozone, they've already got there first. They're already having their economic turmoil moments right now. And since we're in crypto, Polymarket says there's a 40% chance that a recession is going to happen in 2025, jiving, of course, with the JP Morgan estimate. Now, the Atlanta Fed, their GDP Now forecast model estimates are showing that we are currently heading towards a negative first quarter GDP growth for the USA. It's coming. It's happening, guys. As of March 6th, the estimate was at 2.4% to the negative. Now, if it's any consolation, that is better than the earlier estimate of minus 2.8%. Also, do take some note here that the latest number is going to be released tomorrow. So it might even be out by the time you watch this video. But also, the minus 2.4% number was actually later revised due to basically huge surges in gold imports, which totally skewed the numbers in the wrong direction. So the actual GDP, if you exclude that, is at 0.4% growth. So still positive, but a big slowdown from the last quarter. So is there any hope? Well, yeah, of course, there's always hope, okay? It's not just Obi-Wan Kenobi. Your only hope, Obi-Wan Kenobi. So is there anything we should be watching out for? Well, the ISM manufacturing, the PMI, is still saying that factors are humming along. 50.03 in February 2025. Numbers above 50 are good, and yeah, we're uncomfortably close to 50, but still above 50. The caveat is industries could have just been stockpiling ahead of Trump tariffs. Plus, the dollar index is dropping, which is generally a very good indicator for really just risk assets more broadly. Plus, it makes it easier for foreign economies to do things because a strong dollar is the global wrecking ball. Nobody really wants a strong dollar. It's not good for anybody, even America. Weak dollar is good. It's good for crypto. It's good for dog coins. Good for everything, basically. We should also keep an eye on oil prices, which are dropping, which help tame inflation. In fact, inflation's already coming down pretty dramatically on some pretty core items like eggs and orange juice and stuff like that. Going back to the question, is the recession overdue? Personally, I would say no. Okay, it's not to say have a decade to go of perfect market up conditions. We're, due for one at some point. The question is, how far can we go on what's left? Numbers and predictions still align with a potential sort of 4-year cycle thesis. Maybe we finish up the cycle by Q4 this year. Maybe we run a bit farther based on global M2 money predictions. Then we run into, say, Q1, Q2 2026, but it's going to come. Now, for a recession to be declared, you need 2 consecutive quarters of negative GDP growth, although they don't really count it like that anymore, but technically that's what it was. So that still gives us till the end of 2025, and we start getting some negative growth quarters coming in. The Treasury Secretary is also saying that he won't guarantee a recession won't be sparked by their financial detox plan. So there's that. Trump says no recession's coming. Who the heck knows what to believe? Here's a simple fact. A recession will come. They always do. You just want to bet that one's not going to come really, really soon. Nobody knows the exact date, but you need to be prepared. Okay? Let this recent market crash be a big lesson for you. Keep cash on hand. Sell your damn altcoins next time they pump. Grab some cash flowing assets. Assume all of your altcoins will sell off absolutely horrifically beyond your wildest nightmares in a recessionary environment. Now, there is also a wild card, a Trump card, if you will, that Donald Trump actually pulls all this shit off, brings in the tax cuts, gets the U.S. economy pumping, and basically sparks a multi-year, crazier than anyone can possibly imagine, golden era, perfect bull run for his entire presidency. Theoretically possible. But in practice, manage your risk, take money off the table, don't bet on long odds plays. Remember, all this magic internet money, all this dog coins, all this bullshit, in a recession, it's all gonna get hit super hard because everybody runs away from risk assets. That's all really there is to make money in crypto. Look at the facts, try not to be overly swayed by your emotions. I know it's tough sometimes, okay? Be prepared for the good, be prepared for the bad, continually take money off the table, continue to adjust your view and expectations on where things are going in terms of the economy, liquidity, all that kind of stuff, because it's gonna hit your bags when things change in a more dramatic way. So stay frosty out there. Thanks for watching.